Hi guys, my name is Tom. Welcome to this week's video on explaining the term the Greeks, delta. Over the course of weeks and months, we're going to teach different option terms, strategies, and techniques to our viewers. This week, we're focusing on the Greek term, the delta. Our ultimate goal is to educate you about the wonderful and highly profitable world of option trading. As always, do not forget to click the link and subscribe to this page so you receive alert when we post new content. Please also check out our social media pages on Instagram, Facebook, and Twitter. So let's jump into this week's term, which is delta. Before we do that, let's actually do a refresher on what is collectively the term the Greeks. So Greeks in option trading is used in option market to describe the different dimensions of risk involved in taking an option position. These variables are called Greeks because they are typically associated with Greek symbols, delta, gamma, theta. Each risk variable is a result of an imperfect assumption or relationship of an option with an underlying variable. Traders use different Greek values such as delta, theta, and others to assess option risk and manage option portfolios. Trying to predict what will happen to a price of a single option or a position involves multiple options as the market changes can be very, very difficult. Because the option price does not always appear to move in conjunction with the price of the underlying asset, it is important to understand what factors contribute to this movement in the price of the option and the effect they have. Greeks provide a way to measure the sensitivity of the option's price to quantifiable factors. These terms may seem confusing and intimidating to new option traders, but broken down, Greeks refer to simple concepts that can help you better understand the risk and potential reward of option positions. So let's look at delta. Delta represents the rate of change between the option price and $1 change in the underlying asset price. In other words, the price sensitivity of the option relative to the underlying price. Delta of a call option has a range between 0 and 1, while a delta on a put option has a range between 0 and -1. For example, assuming an investor is long a call option with a delta of 0.50, therefore, if the underlying stock increases by 1, the option price would theoretically increase by 50 cents. Follow that? For option traders, delta also represents like a hedge ratio for creating a delta neutral position. For example, if you purchase a standard American call option with 0.4 delta, you will need to sell 40 shares of the stock to be fully hedged. That's how that works. The less common uses of also delta is usually in probability that expires in the money. Sometimes you can look at delta. If it has 40, that means there's a 40% chance of finishing in the money. But mainly it's used for the rate of change. So let's jump into a live brokerage platform and see what delta looks like and what the number actually means. So let's do that now. So we've jumped into our brokerage platform, and what we're going to look at is how delta works and what it looks like in an option chain. So the current stock we're looking at is Home Depot, and delta is right on here, tog delta on here. So this means that every dollar change in an asset, the price sensitive of the option relative to the underlying price. So if this moves up, if you're long an option here, and has a delta of 0.5, therefore the underlying stock increased by $1 will only move up the option price by 50 cents. But here, these option deltas are 0.35, 0.51, therefore. What does it actually mean? Well, it means if you own an option contract that is deep into the money here, if this increases by $1, this option contract will move up by 0.73. So it's good to understand that because sometimes people buy option contracts and go, you see a price jump of $10 in the underlying stock, but then their option contract only goes up by $5. They're like, well, hang on a sec, why isn't it a one-to-one? Well, it's not a one-to-one. You got to look at the delta and the rate of change. That can help explain it to you. Also, one thing you notice, the more out of the money it is, the more movement it has to happen to change this. 0, it's getting less and less and less. So delta is one of the many aspects you can toggle on and off. So that's what delta looks like. That's where explaining one of the many factors of it. I always leave it on to try and have a good look at it. Thank you so much for watching this week's video on explaining the Greek term, the delta. If you like this page, please check out our website and also please subscribe. Please also check us out on social media on Facebook, Instagram, and Twitter. Stay tuned for new content next week. Thank you so much.